Okay, so this is like the end of the market review. So end of market review, what I'm trying to do now on a daily basis is after the trading day is completed, I want to go over like what happened during the day, the setups I took, the setup I missed, that kind of thing, just to like get more familiarized with the methodology, my methodology, how I trade, and basically look at the mistakes. Because like this is my forex journal, right? And the whole purpose of doing this forex journal is to actually get better at my methodology, record as much or collect as much data as I can, look at what I'm doing right, look at what I'm doing wrong, right? And let's get into it. Let me start breaking it down. So we're on the 1 minute chart right now, or I'm on the 1 minute chart right now. So I want to start from Sunday open. So if we look for Sunday open, let me get a vertical line so that I can see better what I'm trying to talk about. Vertical line, yeah, this is it. So I'm looking for midnight. Where's midnight? Midnight is right here. Okay, so I'm going to move that 1 minute further. Midnight. So this is Sunday open. Sunday open, we saw this move down, right? And then we started to see this consolidation, right? We saw this consolidation here, right? Look at it. And then price broke up to the upside, expanded to the upside, right? Then in London session, right, it's very important to take note of this because like this is an Asian range consolidation, and then the market expanded to the upside. And then in London session, right, London session is basically from 9 a.m. For me, is 9 a.m. because 9 a.m. here in Nigeria is 9 a.m. here is 8 a.m. in UK. That's 8 a.m. London time, right? So 9 a.m. This is the London open here. Again, I'm going to use another vertical line to show you the London, to mark out the London open, right? So London open, we had seen a run up in Asia, and then what now happened in London? We had a retracement to that Asian range, that consolidation, right? So this was what we had. This is kind of like a breakout block. If I go to the 5 minute chart, the 5 minute time frame, sorry. If I'm on the 5 minute time frame, this is something I identified as a breakout block. Remember, I'm trading ICT concepts, so like I'm actually learning ICT concepts, right? And I don't fully know all the concepts yet, but this is something he described as a breakout block because you can see like this candle and then push the upside, price came back here, made a lower high, broke through it, made a retest, and then continued to the downside. So this was what happened in London session. London session, we had a reversal. All this move that expanded to the upside. In London, we had a reversal, right? So there was like a fair value gap here on like the 3 minute time frame. So I took note of that. You can see this candle. It's very, so like I don't know if I can explain what a fair value gap is, but like me, I know what a fair value gap is. If anyone watches this video and they don't know what a fair value gap is, just check out ICT, Inner Circle Trader on YouTube, and you can come across that information for free. So there's a fair value gap here. I took note of that. And that was something I was looking for price to maybe perhaps come back to fill in New York session, because from the methodology I'm trading and everything I'm trading, I got from ICT. So it's not me that came up with any of these strategies. I'm just trading what I'm learning, and I'm still learning. This is why I'm actually doing this forex journal, to improve my learning, right? To see what I'm doing right and what I'm doing wrong. I'm not trying to teach anybody anything. This is all for me. This is all for my own consumption. It's all for my own good. If anybody benefits from it, then it's fine. It's a win-win. But like the general idea is like this is for me. So yes, fair value gap. I took note of that on the 3 minute time frame, and I generally I used the higher time frames for like my daily buyers and everything. So I had like kind of a bullish daily, no, I had it like a bearish daily buyers, because seeing this, I knew that okay, this indicated like a shift in structure. But what I was expecting, and this is why you can't really predict the markets, but what I was expecting was for price to come in here and then maybe sell off, right? That was actually my expectations. But something entirely different happened. So for my own methodology, I trade from 2:30, right? And I learned all this from ICT, right? So my trading window is from 2:30. So it's after 2:30, that's when I start to get my own entries. That's when I start to look for my own entry signals, right? So yeah. So I'm going to break down. Okay, so we've seen London session. What did the London session do? We had a retracement to this level. So now, something ICT said also, something he has made mention of is like in London, right? Like sometimes he said New York can be like a continuation of the move from London, which means in New York, I was expecting to get a pullback here and then a continuation, right? So he was saying New York can be a continuation of the move from London, or you can have like a retracement in New York, or a reversal, rather, a reversal, right? So we've seen the Asian session, we've seen this expansion to the upside. In London, we saw the reversal to the downside, right? So what I was expecting was this reversal to the downside to continue in New York, but I wanted to see price come into here, this fair value gap here, and then continue to the downside. So that was my trade idea, basically. So 2:30, this is my trading window. You can see I annotated it right here with this vertical line. And I'm just going to go over what I was seeing at the time. So at the time, I had these highs here, and I was looking at these highs as buy side liquidity, right? But there was something else. Now I'm on the 1 minute time frame. Let me go back to the 1 minute. Let me even take price back here. Yes. So now looking at this, let me show you what I was seeing, right? So I was seeing this, and I saw this low here has been taken, right? I saw that this low here was taken out. So to me, this is like sell side liquidity, raid. So sell stops has been raided here, and I was seeing price pull back, right? And what I was expecting was to see this buy side liquidity taken and for price to come into this fair value gap. So this was the idea that I had, and this was the premise of the trade that I'm about to show you that I took, right? So 2:30 obviously is my entry. So I couldn't take any longs from here, right? Even though I knew that price was going to pull up basically into this fair value. We have a fair value gap here, as you can see as well. So I marked that out. That okay, this is a fair value gap. I marked that out, and I was expecting price to come into this fair value gap. But where I think I made my mistake was I wasn't expecting. I said, okay, I put this trade idea and said I'm expecting price to come here. So what I was expecting to see was like price moving here, do a fake move like this, and then continue upwards. This was what I thought, right? This was what I was going with. Now I saw this candlestick as a bullish order block, this bearish candle here. I saw that the bullish order block price came in here, pushed up, right? On the 3 minute time frame, right, I had seen this fair value gap here forming on this candle. So let me go to the next candle, right? So on the 3 minute time frame, I had spotted this fair value gap, and I was going to use this as my entry if um, I had an entry by 2:30, right? So that was my idea. So going back to the 1 minute time frame, I identified this 3 minute fair value gap, right? So what I was looking for was for price to do something like this, go into this fair value gap, come into this fair value gap, and then run up for this buy side liquidity. So this was the premise of my trade, right? This was what I wanted to see happen, because I was expecting this fair value gap to be to give a false sell signal, right? Because I was expecting price to come into here, into this level here. So what happened next? Price going to that fair value gap, you know, and I got my entry signal. Now, from studying ICT concepts, he always mentioned that it's better for us to buy into down close candles, right? So you don't want to buy the candle when it's bullish. You want to actually buy when it's bearish so that you can actually reduce your risk. So this was where I got in on this trade. I got in right there at the low of that candle. I had my stops below this low, and my target was up here. And what I actually said was I was going to take, since my reason for taking this trade was this level here, right? Because I was expecting price to fulfill this move into this fair value gap. I was going to, this was how I planned to approach my trade. I said I was going to take, I was going to take 80% partial above this high, right? So for me, once price got to this high, I was going to take 80% partial. That was the premise of my trade. What happened? Next candle went in my direction, and you can see that my entry was after 230. My entry was actually 233. So price was going in my direction basically, right? Price has even run out of this fair value gap a bit, ran to the completion of this fair value gap. At this point, I didn't take any partials because my rule was to see price take this buy side liquidity, right, and then come up into here. So the trade was going as planned, and I think why this already is like a 1 to 2, right? This could have been my trade. I could have been done here 1 to 2, right? I could have been done here, but that was not the case, right? I guess we keep learning, right? So what happened next? Price actually started to reverse. At this point, I had not taken any partials. I had not taken anything off. And yeah, long story short, we got stopped out of this trade, right? I got stopped out of this trade. I'm trying to make it go faster, but okay, I think it's lagging right now. Okay, I got stopped out of this trade, and after I got stopped out of this trade, then I was like, okay, lesson learned. And it's good to take note of what actually happened. And what actually happened here is this fair value gap, right? This fair value gap held, right? It took price, we took sell side liquidity. Now, something else on the hourly time frame, right? Even though I took a loss on that setup, is important. The major thing is like understanding price action, right? It's all about understanding price action. Regardless, let me get rid of all these vertical lines because it's too much. I want the chart to be a bit clean, or to be cleaner, so that you can see what happened next. We can see here, or there's another fair value gap here on the hourly time frame, right? On the 1 hour time frame. And you can see that price is still, right? I don't observe that price still came into this fair value gap. But what did it do here? It took out this sell side liquidity, right? So buyers that are in this market, right, will have stop losses below here, right? And this was a purge of that stop loss. So there was sell stops were run here, right? So when price breaks this low, sellers step in. So this was what I saw, and I was like, okay, now we have like a run on sell side liquidity. That's the stops that are below this low. We have a run of those stops liquidity, but we are still within this fair value gap on the hourly time frame, right? So I told myself, okay, there could still be an opportunity for a setup, right? We could get a second setup. So I've taken one trade already. I've taken one trade already, and I'm like, okay, there could be an opportunity for another entry, right? you can see again we ran this sell side liquidity, right? And we ran this sell side liquidity. And you can see how price reacted very quickly. Price pulled back up, right? And I'm like, okay, we have a high here. We have a high here. And to me, this was looking like a break of structure, right? So I was like, okay, we could get another entry. So what came to mind, because I love using the fair value gap, right? I saw a fair value gap here, and I'm like, let me get rid of this one, just keep the chart clean. And I said to myself, okay, if price comes back into this fair value gap, that I was going to take an entry, right? And what did price do? Price came into that fair value gap, and again, ICT says to buy down candles, right? So this was my entry, and I put my stop loss below the wick of this candle, just like this. And my target was, because this fair value gap had been used up, and remember my premise was that price was going to come into this level, right? So I still had that in mind, and this was what I was targeting. I was targeting these highs, right? So this was the trade I was aiming for, right? This was the trade I was aiming for. Still the same ideology from the first trade I was trying to take. So now bear in mind that I've already taken one loss, right? I've already taken one loss, and I majorly risk like 0.5%, but that's on a demo account, right? I'm not trading a live account. So 0.5% lost for the day already, right? And then I had my second trade idea. And to me, it seemed like I was revenge trading, right? Because when I got into the trade, I was like, okay, you can see how the trade started to turn out. Went into profit, then went into loss, then it was just fluctuating at this point. And I was like, okay, at this point I started to ask myself, like, am I forcing the trade? Right? Am I forcing the trade? Am I revenge trading and all of that? So I wasn't really confident in this setup anymore. But something I noticed was, you can see here the fair value gap was not respected, right? The fair value gap was not respected. But there was another thing, right? So ICT talks about, he has a concept he calls the OTE, which is like the optimal trade entry, right? Which is like a reversal, price reversal to a certain fib level, right? And when I took the fib from this low to this high, you can see that price came into this 0.786. So this is considered like an optimal trade entry, right? And that entry could look like this, right? And you could say, okay, this could be first target, and this could be like second target, and then third target, and so on and so on. But seeing as the model I was trading was the fair value gap, I'm not going to lie, I actually started to like feel like I was forcing this trade. So I was like, okay, I'd already taken a loss. And you can see here again, price was still just, this is not my entry. Okay, this is my entry, right? And at this point, I closed out my trade in very close to break even. This is exactly where I closed out the trade. And I was like, you know what? Price is looking like it was going to hit my stop loss. And I'd already lost like 0.5% for the day. And I was like, okay, let me just let this one go, right? So I closed out this trade, and then I went about my day. And I was like, I'm just going to accept the loss that I've taken for today. But lo and behold, came back to the charts later this night, and we need to find out that, this trade actually did play out, right? It played out, it went in my direction. But you can see how it was just very, 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 very choppy, and how it was like consolidating for a long time, right? Price was really, 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 really consolidating at this point. But I wasn't even watching the chart. I'd already closed out my trade, very close to break even. So for the day, I just took my loss of 0.5%, right? I just took my loss of 0.5%, even though this trade entry worked out, but this was not according to my plan, right? Although I could tell that, okay, this is an optimal trade entry, but just the fact that it wasn't according to my plan, I actually got scared and I left the trade, right? So that's just it. This is the end of the market review. and I have no regrets, right? I have no regrets for closing this trade, and I'm happy to take that loss.